Hello everyone, this is Matthew Fraley, and this video is going to be on an indicator that I'm going to offer everyone at Breakpoint Trades for free. We've had it for a long time, but I figured it was time to bust it out of the closet and discuss it a little bit and show you how to use it and offer it to you. So it's this indicator right here. Now you might be saying, why do I want this thing? This one right here is showing two moving averages, a 50 and a 200-day moving or a 20 and a 50-day moving average. The red moving average is the 20-day and the blue is the 50-day. You're like, okay, so what? I can get that anywhere. Yep, you can. What this indicator is it's our BPT MA Deluxe indicator. Now, it's kind of a fancy name, of course. But what it is basically is it's a moving average set that has a ton of functionality that we added to it over the years. So right now, if you see I put my mouse on here, you get this pop out, and you're able to set 8 different moving average types. So a simple, which it currently is set on, which is 1, a 2, which is exponential. You can use a number 3, which is weighted, 4 triangular, 5 adaptive, which tries to adapt to the current situations, and 6 whole weighted, 7 is whole exponential, and 8 is whole modified exponential. Just popping it down on me. So 8 is whole modified exponential, which I'll be showing you at the end. And again, here I'm using a 20 and a 50-day. That's the second moving average, and a simple because I'm using number 1. This moving average set, though, however, has a lot of other features. You can turn off one of the moving averages. For example, let me do that right now. So let me change this to false, and that turns off one of the moving average sets, as you see. So now you just left with the 20-day. And the other thing we could do is we can set the color. So what the moving average, what this will do is it'll set the slope. So if the moving average is moving up, it'll show it red. If it's moving down, it'll show it. If it's moving up, it'll show it green. If it's moving, the slope is down, it'll show it red. That could be useful in many instances, and that's what I'm going to show you in this video. So that's the 20-day, the simple 20-day simple moving average with the slope set to color change. So let's go ahead and change this a little bit more. One of the moving averages that I found useful is an 8 type. That's this whole modified exponential, and simply using a 34 moving average length. 34, of course, as you know, is a fib number. We'll set that. And now you get a moving average that's pretty tight here, and it's basically following trend pretty well, as you can see. But again, it's not perfect. It's changing color here a little bit, but it's following trend very well, as you can see. As you know, many of you have seen before, I have what I call whipsaw method, where I need a second candle confirmation to confirm an indicator change, such as a moving average or a MACD cross or whatever. And so I've built that into this indicator, the moving average set. So if you look here, you'll see use whipsaw. So let's turn that to true. Okay. And if we do that, now, as you can see, now where you could see where it turned red a couple times in these uptrends, it's now gone because it never got a confirmation. Let's make this moving average a little bit thicker so we can see it. And let's go ahead and add a second one of these just below. Okay, so here we go now. I added the same moving average set right here. Again, I just have one moving average plotted. It's a 30, actually here I'm using a 21 moving average, which is another Fibonacci number, as you know. And I have the whipsaws turned on. So, as you can see here, it follows price extremely well. So you can see going back to 2003, it turned green here. In May, it followed this whole uptrend. It turned red on January 2008. It went back green in early 2009, and it's been green this whole time, even though you've had a couple pullbacks here. And if you look at the past history, you can see it's caught the trends very well. It turned back here in early 2001, so it got you out of the bear market, and you can see it stayed green this whole time during the 90s. Little brief stint here in 1990 where it turned red, but it then went right back green. As you know, it was a secular bull market there, so it was generally green in most of those instances. Here's back in the 70s, volatile 70s, but you could see that it still did very well. Stayed green for most of this uptrend, then went red, then went back green, and you can see it's done fairly well. And if you add this to the Dow Jones, for example, going back to 1920, it does very well too. So it catches most of those trends. Again, so that's the one way you might find this useful, is kind of a long-term indicator, kind of a long-term system. It's not a system, but you could sort of use it as that. You can see it generally catches these bull and bear markets quite well when used on a monthly chart. However, notice that I have a couple other standard indicators here. I have just a 14 RSI, and I have this MACD BB indicator, which is a free indicator you can find on the internet. And if you don't have it, I'll give this to you as well. Again, I'll give you guys this workspace, so don't worry about finding it. But one thing I like to do is on a monthly chart, the one thing I've observed looking back about 100 years is that the monthly RSI rarely ever gets oversold below 30%. Unless you're in a really deep bear market. You had one back in 2008, one in 2002, and of course the 1920s and 1970s. It got oversold. But otherwise, it rarely does this. It just happens, maybe a couple times every decade. So whenever this gets oversold, I don't wait for this BPT MA Deluxe to go back green. Sure, it still does well, but you can see it goes back green here, quite a bit off the bottom. So what I'll do is when the RSI gets oversold, I'll simply take the first MACD BB green dot, which is right here. Yes, it's still off the lows, but that was in April. Again, that's only a month off the bear market lows. That's not bad, okay? And looking back here, 2003, 2002 basically, the RSI got oversold here. So you can see the MACD BB dot turned here. So if I would have taken this candle, but then you can see then the next candle was down, but the MACD BB turned red. So I just go ahead and exit it. So yeah, you would go long and then exit. So it's a little whipsaw, but no big deal. You basically you're out within 1 month. But then you got another BB dot right here, which got you back in here, versus waiting for the moving average to turn green here. So that got you in quite a bit earlier. Again, I'll only do this when the RSI is oversold. Otherwise, I don't use that MACD BB dots like that. And looking back here, again, you can see back in the 90s, that RSI never got oversold. It didn't even get oversold in the 80s. So, it took 20 years for this to get back oversold again. Back in the 70s, you could see it got oversold in the 74 sell-off. Those of you who are older, you remember the big market sell-off in the 70s that occurred a couple times. So you can see you got a MACD BB dot here, so you got back in here versus waiting 2 candles later, 2 months later. So you got in a lot better prices. And this here, the RSI just barely gets below 30% there. So if you take the first BB dot, you're in right here. So I get a little bit before that. So that's just a little way you could use this on a monthly chart just to denote the long-term trends. Again, those of you who are traders wouldn't have any interest in this monthly chart, but maybe folks with 401ks or longer-term plans that are not really trading, but they have exposed to the market, but they want to be out for a bear market like this. This could be useful. Okay, and again, that's an example on a monthly chart. Now let's look at a daily chart. So here's a daily chart of the S&P, and as you know, we've had this mega uptrend since the mid-November lows. And let me make this a little bit thicker here. There we go. So here's this BPT MA Deluxe indicator, moving average down here. And for the daily chart, I'm using a 34 length, which is, again, as you know, it's a Fibonacci number, and I'm using the 8 type of moving average, which is the whole modified exponential, and we're using this whipsaw method. So as you can see here, it went green on November 23rd, and it's been green this whole uptrend. Even though we've had a couple little pullbacks, it's been green the entire way. Notice on the price here, the S&P, I have the indicator as well, but I have the whipsaw turned off. Okay, you can see it says, so the whipsaw is turned off on this one, and notice that, you know, it turns red on these pullbacks, so it's a little more whippy. So this is with it turned on, and you can see it smooths it out a little bit, quite a bit better. You can see it turns red here and here and here. So let me go ahead and just delete that off there, make it a little bit cleaner. So you can see it's caught most of this uptrend. And just looking back at the past, you can see it caught most of that uptrend. It didn't get out at the top, but it stayed in pretty good. And back here in 2011, as you know, in 2011 we had a big sell-off in August time frame. It went negative in July before this big sell-off, and a little bit of whipsaw in here as you had some chop. But otherwise, once you started trending again, it basically caught most of these trends pretty well, as you can see. Back here in 2010, it stayed long from September all the way till March of 2011, so that was a pretty nice long trend. Here's back in that flash crash in 2010. You can see it caught most of that uptrend from February to late April. It then went negative here, and then of course you had the flash crash. It was out before that. Again, it's not perfect. It's, remember, all it is, guys, it's not a magic indicator. It does follow price very well, as you can see, but it's not a magic indicator. It's simply a moving average. This is a 34 moving average with a whipsaw, so that it needs a second confirmation to change the slope color. And I'm of course using the modified whole exponential moving average, which is a very fast special type of moving average. So that's what it is. Again, I don't use this just as its own by itself. I use it in conjunction with other things. Okay, it's just a tool. It's not a perfect system. You know, I'll look at what MACD is doing. I'll look at what the stochastics are doing. I'll look at what the RSI is doing, for example. For example, on the 34 stochastics, which is another Fibonacci number, I know that the 50% level is a very important level for trending moves. So as long as it's above 50%, you're generally in an uptrend. So I'll use that as a guide. You can see here it tests the 50% level, but it tests it and bounced basically right off of it. So, you know, this was something I was watching back in late April this year. You know, I'll look at 60-minute charts and intraday charts. So again, guys, this is not something that's the end all, that, you know, it's a mechanical system that you're going to go make $1 million with in the short term. It's just a nice, useful tool. You could use it as a moving average set, as I showed. You could use it as, you know, an 21-day moving average, or a 50 and 200-day moving average, or whatever. Or you could turn all that off and you could just use one moving average, and you could use this BPT whole exponential moving average with the slope turned on, and with the whipsaw method, and you can, you know, have it catch some of these nice trending moves. So again, hope this helps, and I will be making this is just a quick video I made this morning, so I realize that it's a little bit rough. Apologize for that. Obviously in the future I'll make a newsletter or a more detailed video showing it, and I will be giving this to you guys who have TradeStation. You must have TradeStation though, because, you know, I don't have this coded for other platforms, so that's a requirement. But otherwise, it is free for those of you who are members. If you're a free trial member, It's a reason to sign up. Our rates are cheap, so I don't think it's asking too much. And that does it. Talk to you later, and again, we'll see how this market turns out. Find a little bit pullback this morning, but whatever. We'll see if that turns into anything or not. This market has been amazingly strong since November. Talk to you later, guys. Have a great day. Thanks.